everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow being the 26th, going into the end of the month now. Plenty of market movement, I guess is one way to put it. Lots of chop and slop. Crude oil had a pretty good day today, but for the most part, a lot of back and forth. You had to be patient and wait for those setups, but as long as you did, probably had a pretty good day. Now, before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign up your email with our email list so that we can send you and notify you every single time one of these videos comes out. Along with that, we talk about a lot of different stocks and cryptocurrencies and options and all kinds of stuff in the Daily Outlook. So lots of good stuff in that newsletter getting sent to you when that comes out. Along with that, don't forget to check out the posts at the bottom of the blog. Those are going to be everything from live trader morning prep levels to potential big upcoming events to trade of the day videos, you name it. It's probably going to show up in the blog post section at some point, so make sure to check that out when you get a chance. And then, of course, if you haven't done so already, make sure to click on the live trader room subscription and trial info. Inside here, you can sign up for a one-day trial, see what we're all about, and just kind of get a general idea of what we're doing every day. You can sit down with us in the live trade room. You can see all of our screens, and basically it just gives you a day's access into everything that we're doing. So it's a really good way to kind of meet and greet everyone in the membership. You can always talk to me, of course, and see all my screens and trade with us for the day, and it's just a great environment to be in. So if you haven't done so already, make sure to sign up there. And if you really enjoy it, you can always sign up with a weekly and monthly subscription. And of course, as always, if you join as a full-fledged VIP member, that trade room comes as part of the package. Now, taking a look at the overall movement today, the euro had a pretty explosive rally to the upside, a little bit choppy in between there, but for the most part, pretty well defined in terms of where they wanted to go. Until we started pushing into about 11 o'clock. At 11 o'clock, most of the gains that they had made had already been taken back, and we're now shoving down into the last line of defense for the buyers, which is at 16,821. And now that that is also breaking down, we have an open objective to the downside at 16,631 for a slide lower. That basically is giving back all of the gains of the buyers, and once we start breaking that 16,821, a lot of the buyers will begin losing faith if they haven't already, and that is looking for a slide further down into that major objective to the downside. Now, we are forming a little bit of a descending wedge, and we have a lot of shelf support coming in here, so I don't necessarily want to sell right here, but what I would love to see is to let this break down, come back and retest it as resistance, and then look for selling pressure to finish the job off to that objective lower. So at the moment, we're in a little bit of a holding pattern unless you're really aggressive and can stomach the risk involved. Otherwise, waiting for a pullback to resistance and then push the market back down once again. Over on the gold market, another one that looked, at least, like it was going to give a lot back, but we did settle back down towards the lows. We opened up, rally up, rally, or I guess drop lower, rally back to new highs, drop back to new lows, and it really did look like they were going to cycle back up to new highs here, but they did end up falling back lower, and you can see this massive shelf that's forming at 1249.4. The sellers just are having a heck of a time getting through this area of support, and the longer this holds, well, the less ammo the buyers are going to have to defend it. If they keep on defending over and over and over and over again, well, eventually that well runs dry, and if that is the case, we may find this breaking out below it continuation like so. But as long as this is holding, we cannot sell here. There's way too much support in the way, and I definitely do not want to be the one that's trying to push through this level. I'll let the market do that for me, and then I'll jump in on a retrace. So at the moment right now, potential scalping opportunities for buyers. I wouldn't want to be in much longer than scalps because I don't think there's much of a reason to be at this point in time until we get some extra proof. And if we can start breaking down below those lows, then we can look for some more continuation to the downside to finish this job off and break down through a new low, and potentially even further equaling that break higher to the break down. And you'd be looking for a target probably around 1246 if they can start getting that. But again, sell side is off the table until we can start breaking this 49.4. At the moment, looking for long scalps off of that level of support, and obviously if we break through it, looking to sell a retest as resistance. Over on crude oil, we are pushing aggressively higher here now that the API has come out. The API is shoving the market much higher and just finishing off that objective at the highs, 48.24. That objective has been lying in wait since around 1400, and they just now finished that job off. So with that huge pop higher at the very end of the day, it wouldn't be a surprise at all to see this market fade a little bit, right? Let this candle close and then see them just kind of fade around. It's too much, too fast at the very end of an already exhausted trend that's been going on for the entire day. There's no way that buyers are going to want to buy way up here expecting it to go higher, other than maybe hoping that the news helps it along. For right now, though, I'm assuming that a big bull candle close up here is going to be faded back down, and then we can look to start buying back in again. Namely, the perfect storm area where the earlier wedge top comes into play with the channel bottom. I would love to see some support come in there to pop the market back up again. But overall, we're just way too far up, way too fast, and I have to assume that this candle is going to be just a hotbed for sellers to sell into it, assuming that this is going to fade lower. We'll have to give it a little bit of time, but we are very exhausted to the upside, so in terms of buying, I want to buy those pullbacks. I want to buy cheap, and up here, we are at a premium right now, and I just can't be interested. Over on the S&P, finally wrapping up with the S&P, beautiful rally to the upside for the better part of the day. Went into a little bit of a transitional range at around 10 o'clock going on forward, and arguably a really shallow range inside of that. Overall, I think it's healthy in this case for the S&P to find a little bit of a stutter up here. It makes a lot of sense. We are near those record highs, pushing back in. Well, we're fading off of them a little bit here. But for the most part, bouncing off of those record highs and pulling back, it makes sense. A lot of people are going to be taking profit every time it hits those record highs because, well, why wouldn't you, right? Buy low and sell high, and you can't get much higher than record highs except bigger record highs. So a lot of traders will begin looking to sell into these moves, and that's causing this top that we're running into. This certainly is by no means the high point that we expect. We still see the market potentially rallying even higher to 2,500, but that could be a couple days, it could be a couple weeks, it could be a couple months before we start seeing some movement like that. But all in all, we're looking for that continuation to keep on going. And right now, we're sitting at the lows, a big pullback area coming in at 24.73.25. And if you can get a little bit of a dip lower and start trapping this prior swing low, I would love to see that as well at 72.5. Pretty much anywhere down here is wholesale when it comes to buying the S&P after this rally up. And a lot of buyers seem to be taking it that way as well. They're not letting the market really dip below that. And, it kind of makes sense. It's for good reason. This is a beautiful pullback in an otherwise very strong uptrend. And coming off a record high, seeing a pullback like this makes a lot of sense. So buy cheap and then let it go back up to the highs. Right now I'm looking for resistance at 78, and that's going to be my short-term objectives aside from just letting it trail into the highs. But overall, definitely still bullish and waiting for more continuation. So that's going to do it for the wrap-up. Now, in terms of tomorrow's economic calendar, we have quite a bit going on. Tomorrow morning at 4:30 out of the UK, we have the GDP, both quarter-over-quarter and year-over-year for Q2. Forecasted at quarter-over-quarter is 0.3%, and for year-over-year, forecasted at 1.7%. Then we go into 10 o'clock. There's a pretty big span of dead space between 4:30 and 10 o'clock, but at 10 o'clock in the US session, we have the new home sales. That's going to be for June, forecasted 615,000. Then, of course, tomorrow is crude oil inventories as well at 10:30. Forecast for that is negative 2.629 million. Previous is negative 4.727. And then we start going into the fun stuff. 1400 in the afternoon tomorrow, the FOMC statements and the Fed interest rate decisions. The interest rate decisions forecasted at 1.25%. And at 2 o'clock tomorrow, 1400, that is going to be a big deal. We do not want to mess around with anything around 1400 tomorrow. There's just going to be way too much movement and not something that I really want to deal with. So play it safe tomorrow. And overall, we just, like we always say, make the plan, trade the plan, follow those rules, and you'll be A-okay. Until tomorrow, have a good one.